Jerusalem, 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 Jerusalem. Good morning, afternoon, everybody. It is currently 12:25. Didn't stream earlier this morning because I had someone come fix something in my house, so wasn't really in the mood to be streaming and going back and forth. And then I decided to eat because it's time to eat, and then I didn't want to just be silent, so that's why we delayed the stream. I actually haven't looked at the markets for today, but we will be analyzing as we all to, and we're going to start with DXY. So we're going to start in live markets, have a look at it, and then from there we're going to go into study and going over some of the things we learned. So first things first, DXY. So where's my analysis going for it? Okay. Excuse me. Okay. We are bullish. Creating these high highs, high lows. On the weekly time frame, we've broken this kind of range here. You would have argued this to be a consolidation based on the body of the candlesticks on the weekly time frame, which we've been doing for since I think April or was May. We've just been consolidating in this range. We've finally broken out of it, and we have a lot of targets. So price goes to one of two things: liquidity and imbalance. So we can get rid of this consolidation box. This is the nearest intermediate term high, which is the filling of this fair value gap. This is the high right here, and it could also be classified as a swing high. There'll be liquidity above this, which price will be hunting for. We also have this order block right here. There'll be liquidity there, also within this fair value gap, which would be from here to here. These are two main targets we have. So I like to sorry, that's grey, not black. This is the weekly fair value gap. I'm going to put target. And then here is the, how do I text again? Swing. All right. With ITH. Okay. So that's this line. So these are two areas of liquidity. Well, not areas, liquidity targets. The weekly fair value gap, which we can actually, we'll just leave it as it is. This area here, and then of course the swing high from here. So those are two areas that we're looking for. Price is close to this one, so we should expect DXY to continue going up. So that we're looking for some sells over here. We didn't get the opportunity to sell, at least at this point. Potentially could have got one in here. Let's see. Created. But this one took buy side liquidity. Shift, pull back into this low. Interesting. Right. I wanted to see. could go, wait, I want to, there's a setting I believe it can change where it, yes, that's it. So it's from the left hand side. You can change it from here to 3 minutes. And then we can have a look at seeing if the 17th of June. Wait, it's interesting actually because it only shows in a 15-minute time frame. Wait. Well, like this. Sell side liquidity. The market shot the shift, pulled back into this fair value gap. Could have potentially bought from here. The only difference is that I would have probably have entered this just because in that leg we are not in a discount. I probably would have missed out on that. But 17th of June is the day after this. But look. So what time frame is it? So it's 30 minutes, okay? Why? Let me just get the times again. It was 10 to 11. I wanted to change times because it's showing two variations. Another indicator of this. And delete. Oh. Yeah. Kind of like the red and the green though. Mm. I'm like, I think none of them are good. So I need to use toilet. Okay, so we need to define. So our weakness is this: we're good with the entry model. I think like we're basically 10 out of 10 with that. We can see the market shift. We can see the displacement. We know the pullback rules for price to come back to an optimal trade entry. We're in the displacement leg, and then we enter our sell, set our stop loss to the first candlestick, contributing to the fair value gap if that's what we've entered on, above the order block if that's what we've entered on, or above the overall displacement high. That's what I am if I'm not as confident or passive. Maybe the markets are volatile, right? And my TP will be set to my target, whether it be the on the session low, if I'm entered on the New York session, or maybe the daily range, daily low, or my daily target, weekly target. Also, someone keeps disconnecting, reconnecting. It's extremely annoying. What it is exactly. So that's what we're looking for. So the main thing I'm looking for here, so I was on the my phone looking for some indicators. Now with indicators, I'm not looking for price to tell me what to do or an indicator to tell me what to do. I just want to know, like, you see how this, I can just glance, I know that this is the New York session, and I can just glance over here. Let me go to where price is right now. Okay, I know that New York has just taken London's lows. I know that London took Asia's highs and Asia's lows. Liquidity here, bam, got taken, then price went down. This actually would have been a good entry. Here, there's no market short to shift. I mean, displacement. Here, there is. Price, to be fair, didn't come back up, but, you know, still delivered. So my point is this, that I'm mainly trying to look at where to get in. And if I can establish key highs, key areas, key zones, then I can get into multiple trades. So that's my main thing I want to focus on right now. So let's go through, hold on. So we can go through daily buys because that's another one of my weaknesses. There's a live economic calendar I saw, and the way it works is that it brings Forex Factory into my trading chart, so I don't have to go create a new tab. It being Thursday 12:47, it tells me, it shows me, and I can filter it by medium and expected impact, make automatic for the currency. Of course, just this week. So 8:30, which is obviously 1:30 p.m. We're gonna have USD news. If I click GBP, will it change? Yes, it does. So USD, we have some GDP news, which happens at this red line, and orange obviously will be the orange according to the time. So I kind of like this one. Okay, let me make sure it looks like this. And I believe it's daily, right? So the main thing about this I like is that it's given me this candlestick on the side. And the reason why I like that is because it just means that I don't have to, change more time frames for the narrative. Get rid of that box. Look like it's positive. So this allows me to not use like mark out the daily time frame basically. So preparing for red news in 40 minutes. And then we can also see, which is the way to get rid of this box though. I think it's a way. Okay, sorry about that. So yeah, there's no way to get rid of this box, but I like it. The only thing is that I now have to manually, because I can only have 2 indicators at once. Now I have to manually find a session. Now I could, in theory, do this myself. I really like the candlestick. But I think I'm gonna do the nude myself. I'm not gonna lie. As much as it is cool, I think I got that. Now I need to find the correct one. I have 25 on premium. Cool. I'll have to redo it. Okay. Because see how it is, right? So let's say I have a daily, daily and I'm bearish. Okay. As you can see from here and potentially all the way up to here. I'm daily and I'm bearish. So I go to a smaller time frame. What do I see? Well, let me go to like 30 minutes. I can get my sessions visible. So you can see London, Asia, New York. Cool. What did happen at London session? We opened over here from midnight, right? You get to see the power of 3, meaning what? That when we take out the Asia highs, that is us taking out this liquidity. So although we took out Asia highs, remember we have a bearish bias, number 1, right? Number 2, we then have the fact that we're just taking liquidity. So we're bearish and we're taking liquidity. That should really be triggering our mind. Then we have this blue line. a market shot to shift to the downside, taking out this swing low right here. And in that, we have a value gap. We had the market shot to shift, which is our entry model being put into play. And then we have, of course, price pulling back. So what does that mean? That means from this point, we can start looking for sales. Now, ideally, based on our strategy, you want to enter in around kind of the area where it's optimal trade entry, which would have been around here. Your stop loss would have been above the whole high, so maybe like 8.5 pips. And then, of course, the first target is this Asia low for the day, which is the 1-3.78. And then, of course, you could potentially leave some to Tari, maybe this New York low from yesterday. And then on top of that, you could also so 1-6, and then also be looking for over there. Now with the New York Open, remember the power 3 is from midnight, so this just helps mainly for London session. But if it's premature and it's like another pair, then you could potentially even have the ability to enter the distribution during New York session. So here I said I wanted to see Asia highs and lows being taken out. Just one time frame. Asia, London are both here. This one traded lower, traded high, but we still have equal highs over here on the 30-minute time frame. So I'll be waiting for this to be taken. If you want to look at yesterday's lows as well, yesterday's lows, or high, sorry, is over here. Zar Trader says Kunjani Baba. Sorry, I don't know what language that is. I'm not sure what you're saying. So yesterday's high is over here, and then this is today's high. So for example, I can re-edit this. We can call it yesterday's high. Like that. So let me zoom in a little bit. So yesterday's high is all the way over here, which is the high of the New York session yesterday. So I need to change the timings for this. What is this? I'm gonna change it to the kill zone. So London kill zone is from 2 to 5. Would be AM. This would be from 7 to 10. And what would this one be? Perfect. Just grab this. Asia is 12 to 3. Or 7 p.m. to 10 p.m. Okay. Change all this to black. So you would probably be looking for price to sweep that at least. Now, the only way this would work is if you're bearish. Now, in theory, we are. If you look at the line chart, for example, and go to the weekly time frame, you can see that we are bearish in the fact that we have this high here, this low here, which broke structure. But then if you look at the overall trend, you can see here that, yeah, we are pretty much bullish. So the main pairs we generally speak focusing on is GUEU. Have a look here. So yeah, we said we're bullish with DXY, and you can see it's currently moving up. You see this range is being made from this whole day. So that carries or lines up with this idea. Just lines up here. This did the same thing. The difference with EU is that we see this liquidity here. We swept it. We didn't have a market short shift on 5. We had one here. So we swept the high again. We had a market short shift here. That pullback, and then we sold off, this lows and whatnot. That's kind of the idea. So we're going to go back onto, we're just kind of testing out these, or whatever we call it, indicators. And now we're going to go back into our weaknesses, which is the daily bias, and then knowing which area of liquidity to, which forms our starting, our sweep hunt, basically. I'm going to skip over everything that I know quite comfortably. see if this is applicable to Forex. Okay, so let's work on daily bias. I think that's the key right now. Yeah, so let me just give you a little tip that helped me. So you can see this is high, 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 low, right? But there's a lot of highs, there's a lot of lows, and it can be very difficult to know which is a high. Like why is this high here, not here, or why is it not here? You may say because it's the highest. Okay, but how would you know, for example, why is this not the high? Why is this not a high? Why is it not a lower high? How do you know when? Well, the key is that this will be unassigned until either the higher low or the higher high is broken. What does that mean? So here we have a higher low. This becomes a high when price takes out this higher high or this high right here. When price takes out this high, it becomes a high high. Why? Because we're comparing this high to this high. This is a higher high than this. This is a higher high than this. This is a higher high than this. The difference between this high right here and the other ones I mentioned is that this one's the swing high. There's the swing high that's broken the previous high. That's the higher high. So then we create a higher low. How do we know again that this is the higher low? Why is it not here? Well, technically this low is higher than this low. So it technically is a higher low, but it's not the higher low. What is the difference between A and high? A is just that it technically satisfies the basics of the condition. The means that it satisfies extra things, right? What are those extra things? Well, we know that first of all, this is higher than this one. This one is actually higher than this one that's circled. So the one that's uncircled right here is higher in price than in this one. But the reason why this one is used is because of multiple things. One, it is the swing low. This is technically a swing low, but there's another swing low to the right of it. So it's the lowest point. Second of all, it didn't break this, so it still remains a higher low. And so those two factors create it, or the extra steps that makes it the higher low rather than as opposed to the previous low that I mentioned. Then you can see price goes up again. What does that do? What's the characteristics? It breaks the higher high, the previous higher high. So it's higher. And it is confirmed because we confirm it once we break that higher high again. So once this is broken, we know that this is the higher high. So there's some extra characteristic I missed over here. So one is the lowest point of price. There is no other swing lows either side of it within this range. But also, it is fully confirmed when price breaks this high, because what happens if price comes up and then creates another lower low, then that becomes the lower, the newest highest low, higher low. And so the only way it's confirmed is by a confirmation of the break of structure. The reason why that's so is because price could also go down. So until it's confirmed, it is in limbo, and the confirmation is the new market structure. And the thing about market structure is set. This is not set. Why is it not set? Because price can still go down, price can still go up, and wherever price goes would actually change what we call it. If price goes down, it's now a lower low because it broke structure. continues up, it's a higher low because it's now obviously broken structure. But that is taking out this higher high right here. So it is important to analyze the high low. We don't use it specifically. I used to use that, I guess, as a reason to trade. In that, I would use, I would see higher highs, higher lows, etc., and then I'd wait for price to come back to a point of interest within this range. My points of interest would be places like support and resistance at the time. But now I know that that's wrong. We look for liquidity. Chemistry. I'm not going to go over the explanation again, though. I'll explain it better another time. So what I like about this is that he's got a system of how he reads the day. So one, he opens the charts prior to the session open. He reads the daily order flow, which is like the high highs, high lows, that kind of scheme of things like this. Then he gives that an assignment. Then after that, checks for on-field imbalances and liquidity. So imbalances will be this fair value gap here has been unbalanced. We then also have this liquidity over here, which is a high. This liquidity down here, which is a lower low, that is also left to be unbalanced. So which one's closer? We've just filled this imbalance right here. This is closer than this fair value gap. Excuse me. So that is low lows being created, which is order flow. We've identified an unbalance above, but a significant liquidity, drawn liquidity below. That's two in our favor, order flow and liquidity. The previous day close, he checks if that was closed below the midpoint of the prior day's range, so that's 2 days ago. If it closed below the midpoint or above it, in this case, it's hard to see. I think it closed above, I'm not sure. Let's say two up, two down. Then it goes into the 4-hour time frame. The structure should be reading again low lows, low highs, and then of course we should also have market shift breaks to the downside, and then of course from there we then set the buys. me see if I can get fair value gap, high time frame. No idea. Institutional. No idea. Interbank price level. Okay. No idea. Imbalance price action. Intermediate time high, intermediate time low. London open. London open kill zone lower time frame large. Long term high, long term low. Midnight open. Market structure break. Market structure shift. Mean threshold. New York kill zone. New York open. Order block. Optimal trade entry price action. Don't know. Previous day high. Previous day low. Restored support resistance. Sell side inefficiency. Buy side imbalance. No, sell side imbalance. Okay. Stop loss. No idea. Sell side. Oh yeah, sell side liquidity. Short term high, short term low. No idea. Take profit. Okay, cool. Technical analysis. Okay, I've got most of them right.